Hello and welcome to the week ahead, where we talk about Monday's action and what it means for the rest of the week. If that's something you're into, stick around. All right, so this is a picture of the S&P 500, ticker symbol SPY. And yeah, Monday was a good day. I can go ahead and zoom in here. Yeah, our target for the bounce was, in this area right here, and we got into this area and we pulled back today, but end of day we had a nice little rally here on low volume. So we're kind of stalling here, but the fact that we brought it back up, hey, that's not bad for the bulls. It's looking pretty decent here, but if we go any higher from here, I'm thinking that these moving averages are going to provide a little bit of resistance for the market, and we're just going to have to see what happens. But so far, so good. Everything's looking fine, and I think we could continue for maybe Tuesday to Wednesday. Try to rally a little bit more here, especially since we rallied towards the end of the day here. But yeah, let's see what the market monitor has to say, and yeah, some highlights. Let's see here. All right, cool. So for those of you who are new to the channel, basically this is my, I guess, model spreadsheet where I track all the stocks in the market, and that kind of gives me a clue on what's going to happen going forward. So over here on the left is basically the O'Neill strategy of follow-through days, rally attempts, distribution day counts, all that good stuff. So we kind of track how long the rallies are, how many follow-through days are in the rally, and then count the distribution days, and then all that sort of good stuff. And then what I have going over here is basically I'm tracking all of the stocks in the market, whether they're in an uptrend, which is stage 2, whether they're in a downtrend, which is stage 4, stage 1 and stage 3, which are sideways action after a uptrend or a downtrend. And it looks to be like, we're looking pretty good. All the stage 2 stocks are above a moving average, the 16 PA, the 16 period moving average, and the stocks in stage 4 are below. So we have some momentum to the upside, as you can see in the market. So moving onwards, yeah, this T2117, hey, it's at 80, more highs than lows. That's all good. The range of the day was 70%, so we stopped 70% from the high, from the low, 30% from the high. That's a good sign. The market was actually down on the day slightly. Yeah, and then we're above the X21 is the 21 exponential moving average. So we just crossed above that. Everything's looking decent. This trend indicator is a 10-day period trend, which basically tracks if people are buying the ask or selling the bid. And it looks to be like there's a lot of selling the bid going on, whereas earlier there was a lot of buying the ask. Okay, so people are selling into this rally via this trend. That's how we can kind of track that. VIX back down to 25. That's not bad. Yeah, this is interesting. So 20 bull, as you see right here. I track basically the stocks that have made a 20% move in 5 days. And when it gets to 120, that's pretty hot. As you can see, the spreadsheet goes a little bit green. So that's something to consider, short-term overbought indications there. Higher highs, I mean, we've had 1, 2, 3, 4, 5 days in a row of 200 plus higher highs. That's pretty bullish. That typically does not happen. If we go back in time, yeah, I mean, that doesn't really happen that often in bullish markets. Yeah, I mean, even in bearish markets, for that matter, or actually, no. So yeah, in mainly bearish markets, you can get that much, days in a row of higher highs. But 5 days in a row, that's pretty remarkable. So yeah, that's something interesting. 5 days in a row, higher highs like that. It's pretty remarkable. Something to note. So we're a little bit, stretched here. Yeah, bull C and bear C, I just basically track where stocks are, whether they're finishing at their highs or finishing at their lows. BB45, just that's a scan for stocks that are above or below their 45-day Bollinger Bands. And then 5% G or 5% R, green or red, whether stocks are moving up 5% on $100 million volume. So we had 3 days here, and yeah, we're not seeing the volume and the 5% moves anymore. Now this STMU is at 720. That's something to note. I mean, that's pretty extreme. The other times I was looking back that you see 720 stocks in the short-term momentum up, which is basically tracking like the 5-period exponential moving average crossing above the 20. You don't really see it that often. You only see it in bearish markets. You know, going back, okay, let's go 700. Let's try to find 700. So here in 2022 bearish market, we had 700. So if we go back to our charts here, let's go take a look at 722. Yeah, so that's like right here, November 2022 in a bearish market. So, and then we kind of stalled out from there. So that's something to consider. So maybe this is what could happen for the rest of the week. We kind of just stall out here, you know, back up here in these moving averages. That's something that I'm tracking, you know, and the analogs going back kind of corroborate that. So, you know, moving onwards. So the other times that we've gotten 700, yeah, it's mostly bearish markets, you know, 500 here, another bearish market, 700, that was in March of 2022. Let's go take a look at that. This is March 2022 that we're looking at. Okay, let me go back here. What's the specific date? So the 21st. Okay, so if we go back, yeah, so we're right here at these averages. And if we kind of look forward, okay, so we kind of just stall out. So basically for the next 1, 2, 3 weeks, we go sideways and then eventually crack down. So that's something that could be in the works here. We, you know, keep going up a little bit more. Oh yeah, by the way, I added this secondary target area because this was more of a prediction. I can actually just move this higher. You know, let me just take this whole area right here. That's kind of the target for the bounce. I don't need 2 of them. Okay, so we'll move that. Okay, yeah, moving onwards. Yeah, that was basically it. Those were the 2 ones that I saw the market go to 700 there. And then TD Cell is coming down. Yeah, and that's kind of the notable stuff that happened today. Another thing that's interesting is like a lot of kind of junky stocks are starting to move. You know, like the plugs of the world. So plug was up like 25-30% today. I mean, this is like probably the one, like I've always tried to watch this stock. It's one of the worst stocks in the market. It just goes down. And what's very interesting about this as an indicator for the market is whenever this thing starts to go higher, it's like the end of a rally. So if you watch this stock, this thing always kind of comes and starts to moon when people are getting bowled up. Okay, so that's something very, very interesting. What also was interesting? Let me just take a look here. What was this stage? Let me look at STME. Yeah. Oh, yeah. I wanted to show you guys this. Yeah, this is another one of these same similar stocks that are really bad. This Wolfspeed. Yeah, it's doubled. It's another one of these really, really bad stocks that, you know, if you watch it, whenever it starts to go up, it's, you know, a lot of money's been made in the rally so far. Yeah, I mean, some of these stocks that I'm in, they've gone up 50% in a week and a half. You know, like what's this Bitdeer? You know, this thing, it doesn't look like much, but you know, it's up like 50% off of the lows already. You know, so that's interesting. Anyways, so yeah, I mean, Monday was a decent day, quiet day, kind of stalling action, overbought, short term. And I think, you know, going into the rest of the week, we can just kind of chop around here and just see how it acts with the moving averages. You know, even looking at the QQQ as well, QQQ is looking a little bit better. You know, if I can move some of this stuff over, you know, I was looking here. Yeah, so similar action. I mean, these moving averages is finally crossed, so it's kind of, you know, not the best, not ideal, because, you know, when these moving averages cross, it's kind of, I don't know, it's like at least in the last few years, it's kind of a done deal. You know, if we go up to the top screen, this is how I track the market. These are the same moving averages on a weekly time frame. You know, I mean, they crossed here, and we had some unfortunate selling there. Crossed here, we had more selling. Yeah, just altogether, whenever they crossed, you can get more selling. So I'm thinking, like, you know, we can go sideways for a little bit, unless we overcome these moving averages, and yeah, so sideways action or down, unless we overcome the both of those moving averages. All right, so I think that's it. That was not such a bad day, and I hope you guys are doing great. And hey, if you have an idea of where the market's going to go, or something you want me to check out, feel free to write a comment down below. And yeah, if you like the content, please consider subscribing and liking the video. Yeah, so thank you so much, and I'll see you on the next one.